Welcome back to Forex Jumpstart. We're going to spend a little time today discussing the Bollinger Bands. Bollinger Bands measure the current level of volatility in the market and the expected trading range. Bollinger Bands are plotted 2 standard deviations above and below the 20 simple moving average. They're designed to capture on 95% of the market's trading activity. At times, we may use a 3rd standard deviation to allow for more volatile market conditions and isolate only those extreme spikes in the market. In a Bollinger Band fade strategy, in this case to the long side, we should wait for the market to simply cross below and back above the lower Bollinger Band. At this point, we can go long with protective stops placed below the recent lows. We can see here we may choose to go long as the market tests and fails to break below the lower Bollinger Band and essentially crosses back up. Again, stops should be placed below the lows that were achieved while the market was below this lower Bollinger Band. Bollinger Band fade strategy can also be applied to the short side. In this case, we should wait for the market to cross above and back below the upper Bollinger Band. Sell short at this point with protective stops placed above the recent highs when the market was in fact above the upper band. In this case, we can see the market tested the lower and upper band a number of times where we may choose to go long near the lower band, sell short near the upper band, and take profits in the middle at the 20 simple moving average or center line. Bollinger Bands can also be used in a breakout strategy. To the long side, we should wait for the market to cross above the upper Bollinger Band while the market closes at a new significant high. Protective stops should be placed below the recent lows just prior to this breakout. We can see here the market established a new trend to the upside, signaled as the market closed above the upper band and at a new significant high. To the short side, we should wait for the market to cross below the lower Bollinger Band and at a new significant low. Protective stops should be placed above the recent highs that it achieved just prior to this breakdown. In this case, the market did in fact develop a new trend to the downside, indicated when it closed below the lower Bollinger Band and below a new significant low. Again, protective stops should be placed above the recent highs that were achieved just prior to this breakdown. Additional notes: apply our breakout strategy during active market conditions and our fade strategy during quiet market conditions. Note the currency pair traded, as some tend to trade in a more volatile manner than others, depending on the current market climate. We thank you very much for joining us again, and we hope to see you soon inside the 4X Lounge.